Hello and welcome to today's video on ACCA paper F1. Today we're going to be looking at chapter 4 of our Express Notes, which you can download free of charge from the website. Now, this chapter looks at the concept of ethics and corporate governance. So a quick look through the word cloud, you can see some of the key things. Obviously, ethics, governance, ethical, shareholders, company. So what's this all about? This is actually quite a quick chapter, so I'll get straight on. First of all, if you look at page 21, key knowledge, business ethics and ethical behaviour. So what do we mean by this concept of business ethics? As the name suggests, it's applying ethical values to a business scenario. So it's being ethical in a business sense. Okay, now the next question is, what do we mean by ethical and what do we mean by ethical values? As it's saying here, the general idea about whether something is ethical is the discussion about whether something is right or wrong. If it's right or wrong. If it's wrong, it can't be ethical. If it's right, it's ethical, or could be ethical. Why are business ethics important? Next question. Well, from a general point, from society as a whole, it's going to be important for businesses and organisations to work in an ethical manner, to work in the right way. The next one, what about employees? If you're an employee, would you feel motivated to work in an ethical company as opposed to an unethical one? So it can be motivating for individuals, for people that work within ethical organisations. And also in terms of the shareholders, if you're working for an ethical organisation, if the company or the organisation has good ethics, then it could arguably help profitability, which in turn will be good news for the shareholders. Okay, so moving down to the next page. So how do we decide whether something is ethical or not? How do we determine whether an activity is considered to be ethical? A number of thoughts here. First of all, is it illegal? If it's illegal, it is likely to be unethical. If you steal something from somebody, that's illegal, and as a result of that, that is likely to be unethical. The next idea we can look at to determine whether an activity is ethical or not, does it agree with an organisation's code of ethics? So some of the larger organisations will publish their own internal code of ethics, how they expect employees to operate, to work. What happens though if you work for maybe a smaller company or smaller organisation that does not have their own internal code of ethics? What can you use then? Well, you can look towards a published code of ethics. And we'll look at one of these later on. What do we mean by published code of ethics? That's where a professional body, for example, will issue a code of ethics, guidance for their members on how they should act, how they should operate. Okay, the next area of this chapter, we're going to talk briefly about what is a profession. What do we mean by a profession? Now, the fact that you are studying ACCA paper F1 probably indicates that you want to qualify as a professional chartered accountant with the ACCA. The ACCA is a professional body and a profession, so the accountant, for example, also we have doctors and lawyers. An accountant is a professional, works in a profession, and this can be distinguished from other occupations by a number of facts. For example, there's a period of training. There's a process of qualification. Hopefully what you're doing at the moment, you're training towards qualifying as an ACCA and obtaining ACCA membership. And the profession is bound by rules of a professional association. Now, I mentioned earlier about ethics. When you have a spare 5 minutes, have a quick look at this link. rulebook.accaglobal.com. Now this is a very good example of a code of ethics from a professional body. So it's the ACCA's code of ethics. You are not at this stage in paper F1, you're not expected to know every single word of that rule book, but it's a very good base document to give you a feel for what could be within a professional body's code of ethics. So have a quick look through at that link. Okay, now on the rest of this page, I'd like to introduce you to something called social responsibility. Social responsibility, corporate governance. Now, a lot of this is driven by something known as the separation of ownership and control. Separation of ownership and control. So what does that mean? That means different people own a business as compared to those that control the business. So this is quite a nice little diagram down here. We have a company here, an organization. Now who owns the company? It's the shareholders. So the shareholders own the company, but who actually controls it? Well, the shareholders appoint directors, and the directors then control the business on a day-to-day basis. So we have shareholders who own it, directors who control it. And this whole concept of corporate governance is based on this problem with the separation of ownership versus control. Carrying on the next page, as you probably thought already, if you're a smaller company, if you're a 100% shareholder, you could well be the directors as well. So in that case, it wouldn't be a major issue behind the separation of ownership and control. But the larger companies will almost certainly have separate shareholders and possibly even thousands of shareholders if you think of quoted companies on stock exchange and everything. So this whole idea of corporate governance is based upon how a company is governed, i.e. how it is controlled and directed. Now, various areas within corporate governance which are quite important to look at. We have concept of non-executive directors, remuneration committees, audit committees, and the public oversight. First of all, non-executive directors. These NEDs are not involved, so they're not involved in the day-to-day operations. They are not like executive directors. They're non-executive directors whose main purpose is to attend board meetings and maybe give a slightly more external view and to be challenging the executive directors. Remuneration committees. This is an interesting one. If a director controls the company, the director gets paid by the company, then why doesn't the director just pay him or herself an excessive amount of salary? So remuneration committees are set up to determine directors' salaries, for example, and other parts of their remuneration. They will have various non-executive directors on the remuneration committees as well. An audit committee will act as an interface between the auditors and the directors. So in other words, the directors appoint the auditors in effect are then checking on the directors. So we want some form of independent body. Again, that would be made up of non-executive directors as well. The next one to have a quick look at is what is known as public oversight. So this is the possibility for members of the public to come and see what is happening within the business, within the organisation. Now, I'll write down a link here. This is a very good website, British Airways, which I'm sure most of you have heard. British Airways, or BA, is a quoted company on the London stock market. Now, if you go to their corporate website, www.bashares.com, www.bashares.com, on the left hand side there's a link which is marked governance. follow that link and have a look around there for 10-15 minutes, because they've got some very good examples of details of the non-execs, the remuneration committees, the audit committees, and so on for a real-life company. So have a look around www.bashares.com. Follow the link on the left-hand side marked governance, and then look at examples of what a non-executive director is, what a remuneration committee comprises of. Now, the final part of this chapter talks about corporate social responsibility, CSR. Now, what this is talking about is an organisation's duty to look after all stakeholders as opposed to just the shareholders. As we can see here, traditionally CSR, corporate social responsibility, was quite often seen as a burden, as a hassle, as a problem for the company. But now lots of organisations see this as a source of opportunity. As we've said here, it can help improve a company's reputation. Okay, thank you very much for listening. Thank you.